For more on this, we are now joined via Zoom by Warrick Wiegand, who's the director at Law Real Estate. Warrick, good morning, and thank you so much for making time for us. Let's first start over here with the reaction by the markets and looking at how the rand slided even further, eventually hitting that 19 rand 78 cents to the US dollar mark. What do you make of how the markets have responded to this? Because normally when the interest rate is increased, we expect the rand to become much stronger.
Yes, so it's quite a tricky one at the moment. We are coming out of something that's very unprecedented in our times, where we went through a pandemic in March 2020 with COVID, and interest rates were dropped all the way down to 7%. Now, if you look at our interest rate history from the year 2000 to the year 2023, our average interest rates has been 10.5%. So at the moment, with the 50 basis points hike of yesterday, we went up to 11.75. Although it seems very high at the moment, it is only actually 1.25% above what is normally perceived to be the general average on the property market. Obviously, there are a lot of challenging factors at the moment with regards to load shedding and the rumors around the Russian weapons, etc. So we're going to see where that goes. But as far as the property market goes, I do believe there's always opportunity in any market that you can capitalize on opportunities that present itself, essentially.
Yeah. Okay. But then on the other end, there's also the fear of some consumers and those, of course, who are indebted with mortgage bonds that they may default on the installments. And while on the other end, the question is, has it now become a buyer's market?
Yes, it's definitely a buyer's market at the moment. There's a lot of opportunity in the market. As interest rates rise, the amount that a buyer can qualify for is reduced. So what that means is, as each interest rate hike happens, what all the buyers qualify for reduces, so therefore there are less buyers in the market to start with. And then they can obviously take advantage of the market that there's an oversupply of stock, so they can then be putting in lower offers and taking advantage of it. That being said, I do believe in any marketplace, there is opportunity for both buyers and sellers, no matter what is happening. So although buyers, I mean, if you're a buyer, to give you the positives at the moment, you can try capitalize on this by trying to put in very low offers. If you are in a position to get a very low offer accepted, let's say 10, 20% below the actual real value, when the market does normalize and neutralize, which it will over the next 2 to 4 years, you would have already had that appreciation, and then you would have further appreciation from that point. As far as the seller goes, if you are in a lucky enough position that you don't have a high mortgage, or potentially if you don't have any bond over your property, if you do sell now and you bank your money, you would get a much higher interest rate, and you'd be rewarded with your interest a lot more than you would had the interest rate been low. So it is a time where savvy buyers and savvy investors will be able to capitalize on the market. But as said, if you look at the history of the interest rates being from the year 2000 to now being at 10.5% and us being at 11.75, we only actually 1.25 over what is perceived to be the normal average. And I think it's just because obviously the government and National Treasury and the whole world had to reduce interest rates to reduce the financial impact because of COVID, because general population wasn't earning, a lot of the population wasn't earning, so they took it to an unprecedented level of 7. So what we're seeing now is we've had 10 back-to-back interest rate hikes, and it would seem as though the interest rate is getting out of control. But like I said, we are only actually 10 to 15% above what is perceived to be the average. The great thing about the property market is that we can all be experts, and I can be an expert, and everybody can have predictions, but nobody actually knows what the market is going to do, which makes it exciting. So nobody actually knows if the interest rate is going to continue to go up, or whether it's going to stabilize, or whether it's going to go down. They're all predictions. Predictions are that the next interest rate hike may only be towards the end of the year. So these are things that may cause sellers to hold and wait for a better price versus selling in a rush. But that being said, it may get higher. So basically, at the end of the day, what's important is that whether you're a buyer or whether you're a seller, is to make the best possible decision you can on the day with the facts that are presented to you, because nobody knows what's going to happen tomorrow.
Yeah.
As you can see, there's drastic changes in the markets.
Do you expect, though, that there would be an increase in the number of consumers who would be defaulting on their installments, and also how quickly would the banks come in to repossess?
Yeah, look, I think definitely there will be an increase in the amount of consumers defaulting, because you've basically had a 40% increase or 35% increase over the last 2 years in terms of interest rate hikes and what your bond repayment would have been. With regards to the banks, the banks are generally can be quite flexible if you speak to them early on and you try and make a payment plan and you try contribute a certain amount over a set period and say that you are looking to sell, and that if they could assist you in that regard. So there are ways around it, but in general, there will always be people defaulting. Even when the interest rates are low, there are people defaulting. It's just the nature of the beast. But as interest rates continue to rise, definitely there will be a lot more defaulting within the market, which does create opportunities for savvy investors, savvy buyers, and especially buyers that do have a lot of cash at their disposal.
A final one, Warrick. What do you make of the argument that was put forward by the Reserve Bank governor yesterday around administered costs, especially when it comes to municipalities? If we speak about, for instance, levies and so forth, rates and taxes, that municipalities themselves should try and set the increases of those levies and rates and taxes within the band that the Reserve Bank is targeting, or at least within our inflation rate and not above the inflation rate. And also now the MMC for Finance in Ekurhuleni saying that the Reserve Bank is actually hitting consumers very hard with this increase, because now they would also get the defaults when it comes to rates and taxes.
Yeah, look, there is no set rule, set answer on what the right way to approach it is, but I do think that there should be some sort of a curve or some sort of legislation brought in that if we are in an upswing or an up hike of interest rates, that we shouldn't at that point look at any new municipal evaluations, any new increases, any changes to the roll. Because as it is, the crunch is not just around your bond repayments. As interest rates go up, so does your car repayment go up, so does your credit card debt go up. So all of these costs are exorbitant to the normal family or household. So I definitely think there should be some legislation or regulation around. I think it would be a great idea to put forward to government to say that if we are in an upswing of an interest rate cycle, to maybe make a general blanket rule that there are no new municipal valuation rolls, no increases in administration costs or in general household basic utility costs just in that upswing. Because if you look at upswings, historically, upswings in interest rate hikes are generally a 2 to 3, maximum 4-year period, and then it would sort of cool out for the same amount of period. And in general, municipal revaluation rolls are give or take every 5 years. So I do think that could fall in line with it, and I do think that would help. And I do think it's actually a great point you're raising, and a great idea maybe going forward.
Thank you so much for your time. Warrick Wiegand there, Director of Law Real Estate.